This episode, as with all episodes, exists thanks to the supporters of the show who contribute a mere $3 per month via patreon.com/copytradersclub. You can too. It takes 2 minutes to sign up and you probably won't feel it. What you will feel is a warm, fuzzy feeling of helping out a little independent podcaster who creates a show you enjoy and get value from. Patreon.com/copytradersclub. Thanks for listening and thanks for your support. Copy Traders Club, where you can learn how to make better decisions and more money copy trading. I'm Gavin McCauley, my name and username on eToro. Today we talk to a seasoned investor who has been steeped in the investing world since he left school, back when many PIs were still in nappies. Here we go. Season 2, Episode 22 of the Copy Traders Club podcast, and as always, my aim as an eToro enthusiast is to demystify this new and uncharted world of copy trading. Understand what are the pitfalls and best practices, and how ultimately to succeed as a copy trader. In chats like today's, the aim is to answer all your questions about this popular investor, and reveal more about them than anywhere else, so you can assess whether they might suit you. In this episode, we talk to WMBishop, aka WMBishop, an experienced, dyed-in-the-wool value investor, mixing it up with the young'uns on eToro. Ring the bells and bow your heads, for the bishop has arrived. William, hello. Welcome to Copy Traders Club.
Hello, thank you for having me.
Well, we're delighted to have you, and as you know, in order to get past security, you have to answer a series of quickfire questions. Ready for those?
Ready.
Username on eToro.
WMBishop.
Date you joined eToro.
17th of June 2020.
Date you became a popular investor.
19th of July 2020.
Year of birth.
1981.
Place of residence.
Bromsgrove, a small town just outside Birmingham in England.
Profession.
Entrepreneur and investor.
Briefly state what you aim to achieve on eToro.
I aim to have a positive impact and create wealth for as many people as possible from all walks of life.
Name one of your investing heroes.
Terry Smith, the co-founder of Fundsmith.
Name one of your favourite investing books.
Investment Management and Portfolio Analysis by Riley and Brown. It was a book I had on the first year of my course at University of Durham. And it was when I was reading that book as an 18, 19-year-old, then I realised investing is what I want to do with my life.
That completes the formalities. Let's proceed now into the VIP section here at the Clubhouse, the splendid Copy Traders Lounge. WMBishop, aka WMBishop, are you ready for this magical transition?
I'm ready.
Okay, so William, welcome to the Copy Traders Lounge. It is William people call you, is it?
Most people that I see in person, they call me Bill or Billy. Billy if I'm getting told off by my parents, which still happens at 41. My friends call me Bill. When I joined eToro, I was told, it's more professional if you go by your actual name of William. And so on eToro, on Twitter, on YouTube, you'll see me as William. But if you can call me Bill, Billy, it's fine.
Okay, Bill. So you're English, as you said. You're from Bromsgrove in Worcestershire, I believe.
Yes, Worcestershire, yeah.
And Bromsgrove's a town not far south of Birmingham, as you mentioned. So what's life like in Bromsgrove?
It's pretty quiet. The high street is filled with coffee shops and charity shops. There's not much in the way of nightlife, but I'm 41 now, so I'm more of a pub and restaurant sort of person. I'm not the nightclub guy anymore. It suits me at the moment.
So you're 41. Well, as David Brent might say, we're both in our 40s. Yeah, both in our 40s.
Excellent. I didn't realise you were 40 now.
I'm still barely in my 40s. That's the point.
Oh, I thought you were in your late 30s.
Ah, too kind. So I always ask myself, how did I come across the person I'm talking to? With you, I'm not terribly sure. I think it might have been seeing you in the comments of Felix Falek's videos.
Okay.
And I've heard him describe you as a proper investor. I think one of the reasons he says that is because you're steeped in investing, as you mentioned in the Quickfire Questions. You studied a BA in business finance at the University of Durham, and later you did an MSc in investments at the University of Birmingham.
That's correct, yes.
Now, I doubt either of those courses foresaw something like eToro, but you might put me right about that. I doubt there was a class in Twitch live streaming your quarterly results to your copiers in the Philippines.
No. So I started at the University of Durham in 1999, graduated in 2002, took a year out, decided that I wanted to get back into education, joined the University of Birmingham in 2003. That was a one-year course, the Masters. At this point, there was no eToro. eToro, I think, began in 2010. Twitch was just someone's idea at the time. Social media was MySpace. There's no Facebook. This is a whole new ball game. This wasn't in the course.
Well, that's an interesting thing to explore generally, isn't it? You know, how far the world of investing has changed.
Absolutely.
And the fact that you're moving with the times is very interesting.
Absolutely. When I started investing, it was 2003. At that point, everyone charged commission. There were no fractional shares. So the commission charge on UK stocks was £12.50. Not many brokers were doing international stocks, unless you used the telephone, which was a £40 charge. So as a modern man in 2003, I used the internet, paid my £12.50 charge, which meant I had to put in £1,250 as an investment, and then I'd be at a loss of 1% straight away. Nowadays, you can avoid commission. The broker's still going to make money. They're still going to make money in a spread. But of course, a business has to make money. Nowadays, you can buy fractional shares. So companies that were out of reach for some people, say Google is over $2,000. Berkshire Hathaway is the price of a house in a nice area, very nice area. You can buy a fraction of them now. And there's no commission, so it's a lot more accessible for everyone. It's really changed a lot in 18, 19 years.
And do you think the kids of eToro appreciate how convenient they have it?
I don't think kids in any field appreciate how good they've got it until they experience other ways or maybe grow a bit older and then realise about the good old days.
Yeah, so going back to your studies, one question I wanted to ask is, well, many academic studies fail to adequately prepare people for the profession they're going into. You know, even those that sound like they should, most of the learning is on the job, really. I wonder to what extent was that true with you? Or do you think that those courses you did helped you emerge into the world as an almost fully formed investor?
Sure. So I think some people, they get into a degree because it's what they think they want to do. They're happy with, investing is a well-paid career. So that would be a draw for some people. With me, although I didn't initially know it was investing for me, it was a business and finance degree. So I was torn between being an entrepreneur or being an investor. I realised that I actually enjoy this. And when you enjoy something, you you do it harder. You do it in your spare time. You take in a lot more rather than doing the minimum, getting through the grades, and then going to the on the job training. So I think that's definitely helped me a lot. When I took the CFA exams, we can talk more about that if you'd like, but I was speaking to someone. It's an industry qualification. It's known as the Wall Street's toughest exam. You have to sit there an hour before the exam, and you share a desk with someone. They're at the other end, of course, so they can't see your answers. And someone asked me what I do for a living, and I told them, and they're like, "You don't work in the profession? We have to do this. You're doing this because you like it. You're some sort of psycho." I'm not a psycho. I just enjoy the subject. I love reading about it. I'm a forever student in the subject. And because of that, I think that's put me in good stead as an investor.
Okay, changing tack a little bit. I saw a photograph of you with football's Kenny Dalglish, Celtic legend, who I believe went down south at some stage in his career. What's the story behind that photo?
Okay, I have a very generous friend. He works in IT, lives in Birmingham. He has a season ticket in the hospitality section of Aston Villa, like I think eToro do. So hello, anyone from eToro listening. Occasionally, I get invited to the games. My friend is also a Liverpool fan, as am I. So because he's a season ticket holder in the hospitality, he can pick one game in the league where he's upgraded to what's referred to as the director's suite. It's already a nice meal in hospitality. It's an even better meal in the directors, and of course the directors and the dignitaries from the clubs will also be in that room. We noticed that Sir Kenny Dalglish, was on a table talking to the late Sir Doug Ellis. We couldn't believe it. We couldn't take our eyes off him because he's a footballing legend, I think, both for Liverpool and for Scotland. And when it was time for him to leave, we were still there. We didn't want to leave before him. We asked for a photo. And I was very lucky. I got to stand next to him. And I was whispering in his ear, thank you. Well, talking to him, thank you for this. And he was thinking, I just want to go home. While we were waiting for the photograph to happen, there was a game on the screen above the photographer. And it was Newcastle, who he did manage briefly. And it was 0-0 at the time. Someone was taking a free kick against Newcastle. And in went the goal just as the photo was being taken. So I like to tell myself that he looked sad in the picture because Newcastle conceded, but it might have been because I was a bit of a fanboy.
Well, he looks very small beside you. I mean, he's never a big man, but as he gets older, he seems to be shrinking under the weight of his overcoat. Yeah,
perhaps that's true. I think it might happen to most of us. I'm 6'6.5". I'd say 6'7". So
you're 6'7".
Yes, I'm stood up today as I'm talking to you. There's the crease between the wall and the ceiling in my Magnolia room.
You can't say that. You're in the Copytraders clubhouse.
There's the crease in the Copytraders clubhouse.
Oh, wow. I didn't realize you were that tall. Okay, let's get to know you a little bit more when I ask you to tell us something you're very bad at.
Okay. Something I am very bad at, which was not a problem until my eToro days, self-promotion and celebrating my success. The very first memory I have of this is in 1990. I'm 8 years old. My brother is 10, and we took part in a fun run. It was just over 4 miles long. We ran. We got our medals. As far as I was concerned, that was that. A few days later in school, I'm sat there with my school friends at the back of assembly, and the teacher says, "Come on, Robert," that's my older brother, "Come on, Robert, come up to the front, tell everyone what you've done." And yeah, he's 10 years old, so he's run just over 4 miles. That's a big deal. And he tells everyone, he shows everyone his medal. The whole school is applauding him, including myself. And my friend turns to me and says, "Didn't you do that as well?" I'm like, "Yes." It wasn't a big deal for me because I'm not trying to get spotted by Team GB. I'm not going to be Mo Farah. So it was fine. Later on that day, we're playing football in the back garden, waiting for our dinner. I hadn't said anything about assembly. My brother, I think it played on his mind. I think he must have felt a bit guilty that he took all the glory. And he said to me, if I'd have known what was about to happen, I would have made sure you were up there as well. And I said, "Don't worry about it." And he said, "No, you've got to put yourself out there." Last Wednesday, 22nd of June, 2022, I was one of the PIs at the eToro Global Popular Investor Summit. It was in South Bank in London, very nice venue, the British Film Institute, and we're watching a presentation from the elite pro PIs. These people have more than 10 million assets under management. At the end of December, there were more than 2,200 popular investors. That number, we're told, is now approaching 2,500. And at December 2021, there are 17 people with more than 10 million assets under management. This is something I aspire to. Heloise Grief, she was on stage and she said the exact same words my brother said. You have to put yourself out there. This took me to what I hope will be one of the last times where I don't grasp an opportunity for a bit of self-promotion. I think what others would have done in a situation would be to plaster this email on Twitter or Instagram or talk about it on their YouTube channel. If I may, I'll read out the email that's sat in my inbox that I just opened, closed, and never told anyone about.
Go ahead. This is intriguing.
Okay. The title of the email: CISI International Certificate in Wealth and Investment Management Subject Specialists. This is a course that I took because eToro want me to take it. I was happy to take it because, as I said, I'm a forever student in the field of investing. It's the level 3 qualification, which is a requirement of an elite popular investor. Elite pros need to take the next one up, which is a level 4 course. In preparation to become an elite one day, I took the exam, and then I get this email about subject specialists, and it reads, "Dear William, I am emailing you from the Chartered Institute for Securities and Investment, as you are one of our previous high scorers for the International Certificate in Wealth and Investment Management exam." So this is not just one of the high scorers from the eToro people. This is everyone who took the course, presumably last year. I am one of the high scorers. We are currently looking for a practitioner to sit on the International Certificate in Wealth and Investment Management subject panel, which helps develop the exam, and would like to see you may be interested in joining the panel. So, like Felix Falax, they consider me to be a serious investor, or at least I scored well in the exam. I think that would have been an opportunity grasped by many people. It's something I haven't spoke about publicly until now in the Copytraders Lounge. And yeah, I need to put myself out there.
Wow. Hot scoop for Copytraders Club. Fantastic.
You've got the exclusive.
So not only did you score well, but they're looking for you to sit on the board and help develop the exam.
Yes.
It's quite an honor. You must have aced it ridiculously.
I scored 96%. Pass mark is 70%. Pass with distinction is 90%. I scored 96. There's 100 questions. You get 2 hours. I got 4 wrong. And when I found out I got 4 wrong, I was angry with myself. Which
Okay.
People I talk to, my account manager at eToro, family, they're like, "You've scored 96%, that's brilliant." I was like, "Yeah, but I'm so close to 100. I wanted to take the exam again."
Most people would be happy to scrape by with 71.
Yes, I'm not most people.
Evidently. Well, what sort of person are you? Let's find out when I ask you to pick a number between 1 and 10 so I can ask you a question from the art of people.
Okay, I'll use my football number. 3.
What is your favourite charity organisation to support and why?
Well, my favourite charity organisation is the NSPCC. I took part, second year at Durham University, I took part in the Great North Run. I was still keen at running when I was 19 years old. Half marathon is the Great North Run. That is a distance of 13.1 miles. You're stood in t-shirt and shorts in the middle of Newcastle at 6:30 in the morning, so it's not that much fun anymore. But the charity I ran for was the NSPCC. To quote the song, "I believe the children of the future. Treat them well and let them lead the way." There are the children in society, they're the most vulnerable people, or at least they're amongst the most vulnerable people in society. They deserve care. They deserve to be treated well. I was very fortunate as a child that I had a great childhood. I had very supportive parents. So if I can raise some money and give back to the NSPCC, then that's what I intend to do.
Okay, let's get into it then a little bit, William or Bill. We can start by having a look at your profile on eToro, and if I could ask you to read from your bio up to and including the education paragraph.
Okay. About WMBishop, official eToro value investor. Using fundamental analysis, I invest in undervalued companies with the expectation their price will increase significantly. I invest with a long-term buy and hold approach. I manage portfolio risk through strategic diversification. I do not use leverage. The investment period is long-term, which I take as more than 1 year. Education, BA Business Finance at the University of Durham, MSc Investments, the University of Birmingham, and I have passed level 1, 2 and 3 of the CFA program, a globally respected investment management qualification.
Very good. I would have thought that having done the CFA exams, maybe you'd be exempt from the CISI ones, no?
I haven't looked for an exemption, but when I saw the syllabus, I thought there's areas where I haven't looked at before, which would come in handy for my life outside of eToro.
Okay, and you're an official eToro value investor. How much or how little does that mean?
To me, it means a lot. I was recognised as potentially being a value investor by my account manager, and I was referred to the head of the program, Matti Alon. We had a chat and we talked about what it is to be a value investor, and I was appointed a value investor, joined the team.
And what do you think, what hurdles do you think you had to leap to be considered as such?
Well, originally value investing, when Benjamin Graham came out with his thesis when he was teaching at Columbia in 1928, he spoke about you have to go for low PE companies, low price to earnings companies, companies that have low price to book ratios, companies that have low price to cash flow ratios. He wrote The Intelligent Investor, which is a seminal book for value investors. It was published in 1949. It's still read today. I thought perhaps Matti would be religiously tied to that book, but he is more modern, like I am. Value investing has moved on. There is a famous quote from Warren Buffett. I hope I get it right now. I would rather pay a fair price for a great company than a great price for a fair company. That means that we are no longer tied to low PE, low price to book, low price to cash flow ratios. We can buy companies that are growing, so-called growth companies. It might raise a few eyebrows, but the message is the same. If I believe the price of a share is below the intrinsic value of the share, then there's value to be had. I will buy that company.
Yeah, so you're a big Buffett fan. I also hear a lot of Phil Town in the way you describe your approach. Have you read much of his stuff?
I haven't, no, but I will do. I am a big Warren Buffett and also Charlie Munger fan. I don't think Charlie Munger gets the credit he deserves sometimes.
Okay, let's turn our attention to your pinned post. You have a very lengthy and detailed pinned post, and that sets out what you're all about, your value investing stance, and various elements of that, including return on capital employed. Now, I just watched a very interesting sort of newsletter on YouTube, which was talking about return on capital employed, which, for the sake of the listeners, calculated as earnings before interest and taxes, EBIT, divided by the difference between total assets and current liabilities. This is a profitability ratio and provides a value as to how efficiently a company is using its capital to generate profits. Those are your words, I think, from your pin post.
Those are my exact words.
So the idea being earnings growth and revenue growth are not the whole story. You also have to consider the debt and equity picture that is present alongside those growth figures. Now, in the newsletter I was watching, it was talking about CISI Limited, the Amazon of Asia,
yes,
which has seen incredible revenue growth, very similar to Amazon's, in fact, at the same stage. However, CISI has had to employ many times more capital to get those figures than Amazon ever did. And it really shows that those growth comparisons alone are a bit of a red herring. Charlie Munger, your friend, likes to say, long-term shareholder returns can't be too different from return on capital figures. Although he was talking about ROIC, not ROCE, which are slightly different, but that adds another layer of complexity, which is really my question. What's the purpose of your pinned post? Do you think it's correctly pitched for the audience? Or how much do you think the average copier understands or even wants to understand all these metrics and elements?
The purpose of my pinned post is there's a character limit on the biography of 1,000 characters. I wanted to go into more detail about my methods because I'm an investor with substance. I hope that I can educate other people who want to learn about investing. And so I went through in quite detail part of my method. I don't just look at return on capital employed, I do look at ROIC as well, return on assets and return on equity for some companies. That's part of a broader picture. In terms of how much do people wish to learn, there are more than 26 million accounts on eToro, I believe 2.5 million funded. I think some people want to learn. Some people would rather just copy someone and let them do the work and they can go and enjoy their life. I say that because some people, I look at their portfolio and it's full of PIs. Other portfolios, it's a mix of popular investors and shares or other assets they've picked themselves.
So you're trying to pitch it at the level where those that wish to learn get value and those that don't can still get their heads around it?
Sure, yeah. If people don't want to copy me, I'm there to share information as well. There's a lot of false information where people can lose a lot of money. I like to have my record in public on eToro. People know who I am and hopefully they can gain some trust with me and not lose their shirts elsewhere.
Okay, let's talk about your public record. Let me just give the listener an idea of your results to date. For half the year in 2020, that year ended with the annual stat of 4.5% approximately. 2021, the full year ended with the annual stat of almost 21%. And 2022 to date, as of the time of recording, minus 21.75%. Approximately. Now, I've watched your videos, Bill, and in your most recent video, you defend some of those stats and question others. Mostly that's a matter of you having a large cash balance, which caused a drag on your performance stats, right?
That's true. At the end of 2020, I still had 46% of my portfolio in cash.
You also argue against the monthly bar graph and for the chart. Now, on that question, one issue I thought of is, when did you add funds during 2020 or 2021? Could the timing of that be playing a part in reducing a certain month's result for that month? And that might give rise to some of the discrepancy.
In 2020, I added funds mid-August. I wasn't aware at the time how adding funds affects the monthly returns. And if your monthly returns are positive, you add funds, that actually reduces the return for the month. If you add when you're on a negative month, like I've been experiencing in 2022, that would actually reduce the look of your returns that month.
Yes, adding funds brings the result closer to zero, whether it's positive or negative, right? So your August stat is 1.46. That could have been 3% or something.
3 to 4%. When I started on eToro, I had just over 1,000, which was the minimum to be a cadet. And when I was appointed a popular investor, I decided, while I've only got 4 copiers, it will be the least harm to them if I add now. And it was quite a big deposit. It took me well into the region where I need to be for a champion, which is a minimum of $5,000 on average for the month.
Okay, so one thing I'd like to know is, if you were to do it all again, what would you do differently to avoid these kind of annoyances? It strikes me you're a little bit irritated by what the stats show. You think it's kind of not fair. You did a bit better than it looks. How would you avoid that, or how would you recommend just a new would-be PI to not end up experiencing the same thing?
If I were to do it all again, it would start before I joined eToro. The only money that I would add would be money that I was ready to invest at that point, so that you haven't got the cash drag that I had. I'd also pick a username which is memorable and that I can use across all social media platforms, so it's just one username. I would wait until becoming a popular investor until the portfolio looked how I wanted it to look.
Yeah, I think those are good pieces of advice. So you wouldn't go in with $5,000 straight away unless you were ready to deploy it. Well, maybe that would be the best thing if you were ready to, and then you immediately have enough for champion.
Yes, that could be a way of doing it. Obviously, I've got a portfolio outside of eToro before I joined eToro. I wasn't aware that some of the companies in my portfolio were not available on eToro. These are smaller cap UK companies. There's no liquidity for them on eToro, so they're not available to buy. So it did take me longer than I anticipated to invest all of the cash on my portfolio.
Okay, let's talk about your risk score. So your risk score over the past 12 months is a story of 3/3. First 4 months, average 3, max 3. Next 4 months, average 4, max 4, maybe 5. And then the final 4 months, average 5, max 5. Once you jumped up to 6. But that's still quite under control given the circumstances.
Yeah, so I think it's possible to control your risk score.
So overall, you think your risk score is pretty fair?
I think it's pretty fair. I can understand the path it's taken. I don't know personally how the risk score is calculated. So with only knowing half the story, I think it's fair.
Well, it's a constantly moving target, isn't it? Based on volatility and correlation of assets.
Yes, and when one country invades another, oil prices go sky high, share prices are down and up, down and up. Billion-dollar companies are moving by 7, 8, 9% a day. That does affect your risk score.
Okay, let's move on to copier numbers and assets under copy. As of the time of recording, your copier numbers are 86. Previously, it was maximum of about 120 or so.
Maximum was 127.
And your assets under copy are between 100 and 300,000.
Yes, currently $134,190.
Roughly speaking, but who's counting? So I would say you must consider yourself very early in your eToro career, and you have ambitions for much higher numbers generally. Would that be right?
Yeah, absolutely. I've only got a 2-year track record on the website at the moment. I understand why I'm not an elite or elite pro at the moment. I think that will come with time when people get to know me more. And when I am there, I don't think I will be out of place.
I'm fighting words. Okay, adding funds. We've mentioned that a couple of times, and you're going to be doing so again on the 1st of July. Your deposit, you say, will be approximately 15% of your, quotes, realized equity. How does that differ from 15% of your current equity? I mean, realized suggests closed trades, right? Exclude your open positions. I'm not sure that's what you mean.
Okay, so realized equity is calculated from the cash you've got available on your account and also the cash you've allocated to trades. It doesn't take into account your unrealized profits. So my realized equity is higher than my equity on the platform at the moment.
Okay. So it's 15% of that.
Yeah, 15% of that. And my copiers, when I make the deposit, they will get a notification. If they would like to add funds as well, they don't have to, but if they do, they'll get told a value.
And I've seen you saying that what you're planning to do with those funds is very much not buy the dip, but more as a good value investor. You see companies that you want to hold for the long term that are available on sale. They've come down into your strike price and you want to take advantage of those opportunities.
That's correct. I think buy the dip gets thrown around too much. I could have used it in January when I deposited in February. I could have said, yeah, come on guys, let's go and buy the dip. And when I come to deposit next time, people will be saying, what are you talking about? You said you were going to do it and you bought the dip and it's kept dipping. That's not my approach. I don't think that should be the approach of any serious investor. I pick stocks. I'm a bottom-up investor, so I pick companies rather than looking at a top-down approach. I believe there are companies on my watch list that are trading at a price I'm happy to buy at. If they go down further, I intend to buy more of them. There's a Warren Buffett quote, if it's raining gold outside, go out with a bucket, not a thimble.
You mentioned your watch list. Do you want to share with us what your watch list looks like on eToro?
Okay, so my watch list, the companies on there, they've got the same characteristics as the companies in my portfolio. High margin companies, a history of growth, established growth. They're not some sort of pie in the sky company that are going to change how we all live. Perhaps we're all going to live in space. Not them sort of companies. not electric vehicle companies that are definitely going to dominate, which we don't know if they will or not. Companies that already dominate their industry, they have sustainable competitive advantage over their rivals. So I believe they will continue to dominate their industry. High margin companies with high returns on equity that can continue to grow.
Okay, and just to reinforce the long-term value investor point, let's have a look at trades per week and average holding time. Trades per week, 1. Average holding time, 14.5 months. That says it all. Those are unusual stats to see on eToro, aren't they?
Yes, perhaps different, but I don't want to follow the crowd. I'm my own sort of investor. They're actually a little high for me because I'm establishing the portfolio, I'm adding funds, and then February I made, I believe, 14 trades that month. That's not normal for me. So it says those stats at the moment. Over time, possibly they'll come down, but at the moment I'm growing the portfolio, so I think that's about where they will be for a few years yet.
Okay, let's discuss communication for a little bit, how the bishop addresses his flock. You have a YouTube channel ingeniously called Copytrading.
Yes.
But unfortunately, there's only a few videos on there. Would it be fair to say that these are not the most slick, highly produced festivals of colour and sound?
That would be entirely fair. I am not tech savvy, as my viewers will see. My videos, I would like to say, have substance, but they're not bells and whistles. I would like to work on my production quality, on my thumbnails, because they're very important. The copy trading username was changed at the weekend. It used to be long-term investing with WMBishop. You could put that into Google, you could put long-term investing into YouTube itself, you won't find me. So when I'm watching a presentation last Wednesday from Robert Merck, his username on YouTube is Popular Investor. eToro did the marketing for him. So I racked my brains, I thought, what can I use? Copy trading.
Genius.
Thank you.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Okay, Bill, let's look at your portfolio now. Let me describe it for the listener. Asset class allocation. Stocks, 95.5%. ETFs, 4.5%. No cash balance as of today. You've got 24 stocks, which is towards the smaller side when it comes to eToro. Mostly US stocks, but I do see a few outside, i.e. the UK and the EU. Admiral Group in London. Swedish Match, which is a dating website for Scandinavians. Nothing as innocent as that. It's a tobacco and snuff company.
Yes. Smoke-free tobacco products.
Oh. Well, let me finish off this list and then we'll go back to that. Euronext, which is listed in Paris. Ashtead Group, a London-listed construction company. And there's a couple of other European stocks. Let's go back to the smokeless tobacco company.
Yeah, so there's a trend amongst younger people. Luckily, I still talk to younger people, or they still talk to me. They don't want to go outside to smoke. Smoking isn't advertised on TV anymore. It's not the cool protagonist in the film. He doesn't smoke anymore. There's no James Deans. Smoking's not sexy anymore. People are still addicted to nicotine, and this is a way that they can get their fix without filling their lungs with tar. It's currently being taken over, well, it's in the works by Philip Morris, a tobacco company, who hopefully will make all their revenue smoke-free one day.
Okay, so now that is a Swedish company, as I mentioned. And these are very unusual stocks for eToro, these ones. I'm wondering, what resources do you use to find and research these types of companies?
So all my research is independent. I go on to Google or Bing, other search engines are available, and I type in stock screener. There are some good free resources, or you can pay for a decent stock screener. Choose your market, put in your filters, revenue growth, earnings per share growth, anything you like. It will come out with a bunch of companies, and then I start looking at their data.
Do you use resources such as, well, for the US, you might be on Value Investors Club, where other people submit write-ups and things like that, valuations, or the corner of Berkshire and Fairfax? Are there similar ones for Europe?
I have a subscription to Seeking Alpha. I read some of their content. There's some good content there. There's some not so good content there. But most of my ideas come from the stock screeners. I tend not to read too many opinion pieces because I feel it might influence my decision making. I'll build their story into the data rather than looking at the data first and coming to my own conclusions.
Do you like to maintain a certain percentage of your portfolio outside of the US? Keep an eye on that number.
Not particularly. I like to be able to invest anywhere in the world. All of the best companies in the world will not necessarily be found in one market, so I like to look everywhere. I only invest in countries where the political situation is stable, there's not too much political risk, where the accounting methods are of a standard that I'm okay with, such as in the US or the UK or developed Europe. But as a percentage, no, it just happens to be where I invest at the time.
And that is currently about 25 to 27%.
Yeah.
Your top two positions are Domino's Pizza and Monster Beverage. Now, those are two of the more extreme performers in recent history as stocks, unbelievable growth stories, which I suppose you're hoping are not over.
Yeah, I hope the growth picture remains intact.
Okay, let's talk a little bit about themes. Now, it isn't my intention today to bash the bishop, of course.
I should hope not.
Let's get the recording out of the way first. But would it surprise you if I was to declare sin stocks as a theme that I see in your portfolio? Obviously, it's subjective, and one person's sin is another's Friday night entertainment. But I see the following: weapons, tobacco, online gambling, and some might even question pizza and energy drinks. In fact, in one of your videos, Bill, I saw you actually talk quite negatively about tobacco and soft drinks, how those markets are shrinking. So, is it harsh to declare those as sin stocks, do you think?
No, I think it's fair to call them sin stocks. And as you say, people have different moral values. You could throw in companies like ASOS or any fast fashion retailer. You could throw in oil companies that perhaps are harming the planet. I'm not a moral arbiter. My job is to make money for my copiers. If I believe those companies will make money, I will invest in them.
And you've invested most heavily in Domino's. Let's talk about Domino's for a second. I don't mean the one in Bromsgrove beside the Queen's Head at the Argos end of the high street. But it's an amazing success story as a stock. I saw somewhere it said it's up 114 times from the great financial crisis. Seems unbelievable. But let's drill into it a little bit. Yes, growing dividends and aggressive buybacks. Yes, dominant business, worldwide brand that everyone recognizes and many patronize. Yes, Bill Ackman loves it. But is there a danger of all these factors combining to cause people to overspend in their enthusiasm to own it? That's the rhetorical question. Now, a bear might say Domino's is returning more value to shareholders than it can afford. Free cash flow is approximately $500 million a year. Repurchase of stock is costing them more than that annually, sometimes a few times more. Rising dividends on top of that. So that means they're paying out significantly more than they're making in order to return value to shareholders. If there's plenty of growth going on and low debt, that's all good, says the bear. But there isn't that much growth going on, really, and there's significant debt. Net debt's about $5 billion. Can pay it off in about 10 years. So a bear might conclude that the share price has been artificially elevated by these very expensive buybacks, and in a high-interest environment, these debt levels could bring the whole house of cards crashing down. Would such a bear give you pause?
Yeah, so Domino's have been aggressive in repurchasing shares. Their debt level is so high that, in fact, the equity is a negative number. It's a profitable company. So some people who are not familiar with accounts will be like, well, why is the equity negative? Retained earnings is part of equity. They've actually bought back so much capital, they've used all of that retained equity, and they fund the buybacks through taking on more debt. You can see that from the cash flow statement. Debt is so large that it could be a problem, but if the company decided to stop buying back debt, they won't need to add to that debt balance at the moment. In terms of interest paid, I have the figures for last year. The operating cash flow before interest and taxes was 4.8 times larger than the interest that they had to pay on that debt. They've refinanced their debt, took advantage of the currently low interest rate environment, which is now rising. That cash flow interest coverage could go down in the future, but at present, they have almost 5 times operating cash flow to interest requirements. They can service their debt.
Were the share buybacks and dividend a very important part of the reason why you bought in?
The share buybacks were more important. Share buybacks are always more important to me than dividends. I don't look at a company for its dividend. If it pays me a dividend, okay. If it doesn't, I actually prefer that. Share buybacks help to boost earnings per share because it's split between a smaller number of shareholders. The net income is split between a smaller number of shareholders. Some people value a share based on the multiple of earnings. So if we can get a boost there, I'm going to be a richer man for it.
And if they eased back on the buybacks, would that be significant in terms of your investment thesis?
No, not particularly. I think they could pause for a while. I certainly don't want them to be in a position where they're struggling to repay the interest. I believe they can continue to grow. The international operations are completely franchised. It doesn't cost them anything to run. So that goes straight to the bottom line. The gross margins, the operating margins for Domino's are huge. If they continue to reinvest in the company or even buy back shares or give it to shareholders through dividends, they'll continue to do well.
Okay, you mentioned dividends and how you're not particularly focused on seeking them. They're more of a bonus than anything else, by the sounds of it. But you've got quite a lot of dividend payers. I saw on one of your posts on eToro, your dividend schedule for June included Admiral Group, Visa, Lockheed Martin, Nike, Nvidia, T-Rowe, Domino's, Medifast, Vanguard, Small Cap ETF, and your other ETF, the iShares, MSCI, Emerging Markets ETF. So you're not adverse to gathering up dividends?
I'm not averse to it, no. There's 22 companies, 2 ETFs in my portfolio to make up the 24. Of those 22 companies, 5 companies don't pay a dividend. If I was more concerned about dividends, I would never buy those companies. But these companies are Alphabet, the owner of Google, Monster Energy, Copart, Meta Platforms, which is not doing so great right now. VeriSign that have got ridiculous returns on capital employed. It's more not so much a tech stock, more of a utility in my mind. I'm not averse to buying zero payers.
Okay, so let's turn our attention to your copiers, Bill. Who should copy you? Delete paper sounds.
So, who should copy me? If you're happy to invest in a medium risk portfolio, I'm your PI. If you want an equity-only portfolio, I'm your PI. If you want to own only quality companies and not any nonsense pie-in-the-sky companies, I'm your PI. If you want to copy someone who puts you first, I'm your PI. If you want to invest or copy someone who has a business finance MSc in investments and has completed all the exams in the CFA program, I'm your PI. If you want to go and get that qualification, my qualifications, by all means do it. It's going to cost you approximately $100,000 and it's going to take about 7 years. You can copy me for $200 and I'll invest for you straight away. If you want to copy an experienced investor, someone who's been investing for almost 19 years, I'm your PI. I've invested through the Great Recession, the worst recession apparently since the Great Depression of 1929 to 1939. I was there to witness the dot-com bubble. I didn't have any cash to invest, which was a blessing at the time. I've witnessed other bear markets. I'm in this bear market now. I know how to steer through it. If you want someone to steer you through it, I'm your PI.
And you're my PI among how many PIs do you recommend?
Well, if you want to invest the same way as I do, I guess I'm the only PI because I'm certainly not copying anyone. I don't invest in actively managed funds. The ETFs I'm in are trackers. If you don't want to be 100% equities, I mean, there's 2.5 million funded accounts out there, so you're all going to have different needs. If you don't want an equity-only portfolio, but you do want some equities, maybe I'm your equity PI, but you're going to want perhaps an exposure to crypto if that's what you're into. Maybe you want dividend income. Maybe you want more dividends. I'm not the dividend guy. So you could add to other PIs. It all depends on what your strategy is as to how many PIs you want. I don't think there's a magic number. But if you want an equity investor as part of your portfolio, then you should at least have one in there.
Do you have many copiers that copy only you?
I looked at this number yesterday and I was quite surprised. Out of 86 copiers, apart from the anonymous ones that I can't see, there are 30 that only copy me.
Wow.
They're not 100% in me. Some of them are. Others have either picked their own shares or they've actually added more shares that I've got in my portfolio and held them directly. But yeah, 30 people. I know personally 13 of them. So there's 17 complete strangers where I'm their only PI. And they're in different countries, some as far as Australia, and that's very humbling to me.
And when you see the other positions they have in their portfolios, is it clear to you that you're speaking the same language?
Yeah, I believe my copiers are smart. They've picked me for a reason. I haven't got a long track record on there. They've listened to what I've said, and they're on board. Of course, some of them, they have investments where I wouldn't trade, such as cryptocurrency. But if they want exposure to that, by all means, go for it. I haven't studied cryptocurrency. I make plenty over in the equity arena. So if you want to go for it, you probably know more about it than I do. Go for it.
I have a question here that I don't think we need to ask. I think you've made this point very well. The question is, what makes you so special? There's no need to go into it, really, because you've explained your background, your approach. It's very clear what people are going to get when they copy the bishop. I keep making bishop references. Is that annoying?
I'm used to it.
Did you get, when you were in school, did lots of people make bishop gags?
More after school, when I was in my first couple of jobs.
Well, I was going to ask, do you do this all yourself, or like any good bishop, do you have a staff?
I don't have any staff. Everything I do is 100% me.
You touched on something earlier, which was something you mentioned in one of your videos, the limited stock selection on eToro. For example, the AIM, the alternative investments market, is not on eToro. As I discovered when I went to see if I could buy shares in Celtic. But I can't, even though they're destined for significant growth over the next few years with Champions League group stages year in, year out under Big Ange. Is that one of the things you'd love to change on eToro?
I would like to see as many assets out there as possible. I don't like to be restricted in what I can buy. But I will say, since I've been on the platform, they have added significantly more shares. There is a website on eToro where you can request companies to be added. I haven't personally used that at the moment, but I do see others being referred there. They are trying to put more on there. If liquidity allows, then they'll do it.
Are the limitations greater in Europe, you think, than they are in the States?
I think there's more focus as a stock market as a whole in America. It's the largest stock market in the world. So yeah, there are more tiny companies. There's companies that are tiny that I'm going to know a lot better over here rather than others that I've read about in the States. So that's just a pity for me, but it's something I have to deal with. There's plenty of companies out there. I think there's more than 3,000 on eToro now. So I've got quite a lot of choice.
Okay, here's a question that may have changed in light of the recent PI meetup in London. What other PI would you say you know the best on a personal level?
Before the summit, I didn't meet any PIs. At the summit, I got chatting to quite a few. We had a few beers at the free bar afterwards, and I got chatting to Steve Walmsley from Preston. He's a nice guy. I also got chatting to a guy called Andre Franco. He's Italian. He now lives in Hanoi. He's seen quite a bit of the world. He was really interesting.
Are these guys value investors like yourself?
I don't believe they're part of the value investing program. I haven't looked at their portfolio as such. We just had a chat on a personal level. I did watch some value investors when I was there. One guy who in particular impressed me, seems very knowledgeable. His username is Triangular Capital. I'm not going to attempt to pronounce his name because I might get it wrong.
Pietari Laurila, I think.
Yeah.
Is the correct pronunciation.
He's an interesting guy.
If you're listening, Pietari, we'd love to have you on the show. So what did you learn from the PI meet, other than getting to know a few PIs? Did you watch presentations and did you get a feel for how eToro's going and things?
Yeah, there was some presentations from the elite PIs. So it was good to hear from them. They put into words what deep down I kind of knew, that I have to get myself out there. I have to promote. This is a new area for me, something that I'm not technically gifted at. My focus has always been on the investments first, but I do have to get my story out there. There was a marketing seminar that I watched. Nesatron, she was on there, Wesley Knowles, J.P. Kirk Bond, and Robert Merck. They presented came out with some very interesting ideas on how to get your story out there. That was probably the biggest takeaway for me from the event.
Yeah, because PIs have to sell themselves and sell the service they're providing. Not everyone's providing the same service.
Yes, and it's not something that comes naturally to me. And when I was reading a book, it's called Shoe Dog by Phil Knight, the founder of Nike. When he needed investment to grow his company, he felt uncomfortable. I could relate to that. He has to do a lot of handshaking, like face-to-face stuff, because the internet wasn't around. It's necessary, though, if you want to grow a business.
Okay, final question, Bill. What question have I not asked you today that you wish I had have asked?
I really wish you would have asked me what has been my best investment over the course of the last 18 years and 9 months.
Consider that question asked.
Okay, on the 30th of March 2006, I bought a company called MasterCard, and we've all heard of it. It's a payment network. At the time I bought them, this is a split adjusted price, $4.30 per share. I've received after-tax dividends, I still hold them, I've received after-tax dividends of $9.01 per share. The share price now is $330.50. That's a return of 7,795.58%, or as the kids would say, 78.96 times your money. That's a compound annual growth rate of 31.17% for the last 16.1 years. Also, I'm a UK investor. MasterCard is an American company, so I did have a bonus there where the dollar has got a lot stronger against the pound since 2006. When I invested, the dollar was the dollar to the pound. £1 would buy you $1.8821, and on Friday it was $1.2272. Based on that exchange rate, the two exchange rates, and if you just forget about the dividends, because it's not a particular focus of mine, the £982.41 that I invested on Friday was worth £115,804.27, 117.88 times my money, or a compound annual growth rate of 34.48%. The dividend yield on MasterCard is very low. That did not faze me because I knew that they could grow their business, or believe they could grow their business. They've got experience of it in the past. And I'm very thankful that I took that investment.
Wow, he's come prepared. He's brought receipts. He's a details man. That's what you get from WMBishop. Bill, thank you so much for being with us today. It's been very interesting to get to know you.
Thank you for having me. It's been a pleasure.
And can't wait to see how you get on in years to come. Elite Pro, and you won't be out of place.
Let's hope so.
All the best.
Thank you. You too.
Many thanks to Bill, the Bromsgrove Bishop, for dropping by. As he might say himself, his presentation may not be flashy, but he certainly gets his point across. In chess, of course, bishops can only move in one way, but we look forward to seeing what variety of social media and marketing moves Bill makes to help bring his message of hope and salvation to the masses. That's all from me. See you on Discord and Facebook. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit-chat. We don't know your individual circumstances, etc., and so forth.